Another bill.
Alternatives. We're here to better understand what central bank digital currencies are and the concept of digital money, to compare CBDCs to privately issued payment stablecoins, and how design choices would impact areas like consumer privacy, banks of all sizes, and monetary policy. I'd like for members to hear from our witnesses today, not only about the communist China's proposed digital yuan, but what steps the United Kingdom and the European Union have taken and why. So far, the conversation is focused on the Federal Reserve's legal authority to issue a CBDC. Look, the Constitution is clear. Only Congress has the authority to coin money and regulate the value of such money. And we've heard the same from Fed officials right before this committee, and most recently from Vice Chair for Supervision, Michael Barr, who last week told an audience in Philadelphia, and I quote, "The Federal Reserve would only proceed with the issuance of a CBDC with clear support from the executive branch and authorizing legislation from Congress." The Biden Department of Justice agrees, saying, quote, "There would be substantial legal risk to issuing a CBDC without such legislation." So let me be unequivocally clear here for this audience. There is no support for a CBDC in Congress, except from those on the fringes who think somehow a CBDC might be an amazing solution to many unstated global problems. Several members, Mr. Emmer, Mr. Mooney, Mr. Auchincloss, and I have introduced bills stating that the Federal Reserve does not have the authority to issue a U.S. CBDC. I particularly want to say thank you to Mr. Auchincloss, Mr. Torres, and Mr. Nickel for their work on our bill and demonstrating that this isn't a controversial or partisan point of view. Let me be clear. While a retail Federal Reserve issued CBDC is not in the cards, there are many significant areas for improvement in our U.S. payment system. We need less complaining and more facts and progress. Payments can be modernized by modifying the existing system infrastructure through innovations led by the private sector. Some modifications have yet to be implemented, like expanding the days and hours of the Fed wholesale payment services, like the National Settlement Service, or FedWire. These developments will provide for instant payments for individuals and businesses through their financial institution. It's not okay that the Fed still hasn't finished this work, even a decade later, with no clear timetable for its completion. However, other improvements are already underway. The RTP network has been around since 2017, while the FedNow service was recently launched in July. Turning to innovations in blockchain payment rails, our committee marked up Clarity for Payment Stablecoin Act in our committee during July, which establishes a federal regime for payment stablecoins with strict reserve and capital requirements, disclosures, and attestations to protect consumers. I want this hearing to explore whether a U.S. CBDC is the most efficient and effective means to address payment inefficiencies, or on both sides of the aisle for their dedication to thoughtfully explore this issue. Working together, we can modernize the U.S. payment system. The chair now recognizes the ranking member for the Subcommittee on Digital Assets, Financial Technology, and Inclusion, the gentleman from Massachusetts, Mr. Lynch, for 4 minutes for an opening statement.
Thank you, Mr. Chairman. For holding this hearing on such an important topic, as the former chair of the Task Force on Financial Technology, I held a handful of hearings on central bank digital currencies during my tenure. We heard from experts who discussed the potential ways in which a government-issued digital dollar could be designed to promote financial inclusion and protect privacy while streamlining our payment system and preventing fraud. I'm eager to continue these discussions, if that is allowed, and I hope that we can do so in a productive way. I worry about some of the recent false narratives and fear-mongering, much of which has been fueled by the crypto industry itself. that fear-mongering around the CBDC being weaponized as a tool for government surveillance or control. It's important to correct some of the inaccurate and misleading claims that could lead us to shut down innovative policy approaches before we have even begun a meaningful discussion. CBDC is just one type of publicly issued digital dollar. It would be issued, backed, and regulated by the Federal Reserve and have the full faith and backing of the U.S. government. This could serve as an alternative to existing forms of payment and have a benefit including instant payment settlement, provide a medium for cross-border transactions, and foster greater financial inclusion. More than 130 countries have begun to explore their own government-backed digital currencies. China, Russia, Saudi Arabia, and India have already commenced pilot programs, and a digital euro pilot could be launched as early as 2028. Meanwhile, the U.S. remains far behind amid increasing and blatant information about features of digital currency. While concerns about data privacy and government surveillance are real, especially in countries that do not respect human rights and privacy, a CBDC does not have to be designed that way. We could employ an architecture that would protect personal data while improving anti-money laundering and terrorist financing. It is counterintuitive that my colleagues should be raising concerns about data privacy while thousands of private companies, domestic and foreign, are surveilling, aggregating, and selling consumer data each and every day. As policymakers, we should be asking questions about how a digital dollar could be designed to maximize privacy and prevent exploitation of personal data. To dive further today, I'm announcing and inviting my colleagues to join the Congressional Digital Dollar Caucus. This forum will educate members on critical issues relating to the development, design, and potential implementation of a government-issued digital dollar. I plan to invite innovators, technologists, academics, and other experts to share their findings and development. I hope my colleagues will join me in this exploration. I should make it clear that I do share the concerns with some of my colleagues about the need for digital currencies that respect privacy and anonymity. The use of anonymous cash has plummeted, and more of our transactions are occurring online and under surveillance, tracked and aggregated by financial services companies. Indeed, China has turned that back into a tool of full-spectrum surveillance of its citizens. This is why I've introduced the eCash Act. This bill directs the Treasury to design and pilot a digital version of cash and would complement the Fed-issued CBDC. It would allow individuals to make instant peer-to-peer payments with no consumer data or transaction tracking and without the use of a bank account. This bill represents one of the many design choices for the digital dollar. In closing, I hope my colleagues will join me in this exploration rather than moving legislation in advance prepared for machine and CBDC, or even go so far as to prevent research or pilot programs. I call on my colleagues to thoughtfully engage on this topic and do not succumb to industry-driven narratives that prevent the U.S. from moving forward. Thank you, Mr. Chairman. I yield.
Intermediated by banks, governments, or big tech. We must develop digital tools that function like cash. These digital assets must be open and freely accessible to all, without requiring permission from the government or anyone else, and private, safeguarding the user's identity. These qualities are fundamental to a free society. Unfortunately, the administrative state would rather have a cashless economy run on a central bank digital currency, a tool that communists have, than to work to maintain our American values in the digital age. The need to protect Americans' right to financial privacy is an all-time high. That's why I introduced the CBDC Anti-Surveillance State Act with over 50 of my colleagues. This bill prevents unelected bureaucrats from creating a tool for financial surveillance. If not open, permissionless, and private, like cash, a CBDC is nothing more than a CCP-style surveillance tool that will oppress the American way of life, and we're not going to allow that to happen. Mr. Chair, I'd like to submit to the record my December 1st letter to the Susan Collins at the Federal Reserve Bank of Boston about their shady CBDC pilot.
Without objection, the gentleman's time has expired. With that, we want to welcome the testimony of our panel. Dr. Norbert Michel is Vice President Director of the Center for Monetary and Financial Alternatives at the Cato Institute. Mr. Ms. Paige Faradon is the Senior Vice President, Senior Associate General of the Bank Policy Institute. Mr. Yuval Rooz is the co-founder and CEO of Digital Asset, an enterprise blockchain provider seeking to provide programmable smart contracts to traditional financial institutions. Professor Christina Skinner is an associate professor at the Wharton School at the University of Pennsylvania, where she focuses on central banks and fiscal authorities. And Mr. Raul Carrillo is an academic fellow and lecturer at the Columbia Law School, where he analyzes financial regulation, technology, and innovation. We thank each of you for taking the time to be with us today. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, each of your written statements will be made a part of the full record. And we're going to start with Dr. Michelle here now.
Yuval Rooz, the co-founder and CEO of Digital Asset. As this committee deliberates on how best to bring the dollar into the digital era, I'm here to make 2 requests. First, that Congress ensures that any digitally represented dollar, whether a stablecoin or a CBDC, is within our constitutional framework. Americans using any digitally represented dollar should have the assurance that their privacy rights are protected under the Fourth Amendment framework. Second, that Congress works closely with the private sector to leverage this technology already built and proven to serve the rails as the rails for any digitally represented dollar. Any solution that ignores private sector innovation risks technological stagnation and will ultimately undermine our global competitiveness. I helped found Digital Asset in 2014. Digital Asset is at the forefront of modernizing the infrastructure of our financial system with our privacy-focused blockchain technology. For 9 years, we have worked hard to carefully and responsibly innovate to solve real problems in financial services. Today, our clients are using our privacy-focused demo application platform and Canton blockchain protocol to reduce the time to issue bonds, stocks, and other financial instruments from days to seconds, ultimately reducing the settlement risk and increasing efficiency. One client is using our technology to process over $1 trillion of tokenized repo agreements per month. And our technology was recently used in a pilot project with the New York Federal Reserve's Innovation Center to demonstrate how blockchain technology can modernize the infrastructure for global dollar-based settlements. Importantly, this pilot project tested a shared ledger within the existing 2-tier banking system to more efficiently report the movements of Federal Reserve money that occurs between banks on a daily basis. We recently announced, along with 29 market participants, the launch of the Canton network to help connect institutions and move value global. Our success is in no small part due to the fact that our technology is built with privacy at its core, making our technology well suited for financial services. I'm here today because we embark on a new digital era in finance. I believe the global financial competitiveness of the United States, including the dollar's position as a global reserve currency, is at stake. This is a critical national security issue that demands innovation led by the private sector. The private sector innovation alone is not sufficient. As we've seen with the invention of the internet, without a proper policy framework absent a strong partnership between the public and private sector initiatives may displace activities properly considered public goods, specifically money, that are due to the protection offered by our Constitution. We expect our financial transactions to be afforded the privacy protections of the Fourth Amendment, and this should not change as payments become more digital. History has shown that technology is inseparable from finance, and today we stand for another technology important and is an engine to drive our economy. In an area as critical as finance, innovation needs to occur in a deliberate policy framework to ensure that innovation does not outcome or undermine our values and national interests. Thank you.
Thank you.
It's loaded on people's mobile wallets and used to pay for things at a checkout counter. It's a big reason why some of us that oppose a U.S. CBDC warn, for example, that an unchecked government could monitor your purchases at the gun store, flag you as a threat, cut you off your access to your bank accounts, even though you haven't done anything illegal. You think Operation Choke Point was bad, but that seemed in. Payment and transaction data can tell you a lot about something. That's why CFPB's Rule 1033 about the scope of the rule and whether it should be extended to Reg E and Reg Z accounts or beyond is so important. So in terms of payments, I'd like to have a good discussion about how Congress should be thinking about CBDCs in a world where payment stablecoins already exist with a total market capitalization of between $100 and $200 billion, and they're already here, they're already functioning. They aren't really being used by retail holders to pay for things like Starbucks coffee, but if stablecoins are issued under a strong federal framework, like the one we envision in our Clarity for Payment Stablecoins Act, they certainly could be. So, Mr. Rooz, in your view, could a U.S. CBDC and payment stablecoins coexist and be integrated and interoperable with one another? And should they?
Thank you, Chairman, for the question. First of all, I do think that any technological solution that the U.S. would want to carry forward is possible. I think that, as I stated in my opening remarks, I think that when it comes to money, trust is a very big component. Therefore, privacy is going to be a very critical component. I think that it's important to understand that our perspective is that the usage of blockchain technology is all about reducing participation. And I think that it's important that the government, in order to have trust in its payment system, whether it's by the private sector or by the government, has our privacy protected. You stated that stablecoins exist today. That is true. And I do think that there are technologies that can even improve our trust in stablecoins. As we know today, there are companies out there that know how to look at public permissionless blockchains and harvest information. And therefore, I think that we should, as introduced by the bill on stablecoins, create a framework that helps the government also set the rules for stablecoins.
Thank you. Appreciate it. Mr. Michelle, do you think?
Happening around the world in other countries. Is there anything else that you could add to it that would show us?
Ohio, the ranked vice chairman of Digital Asset Subcomittee and chairman of the Housing and Insurance Committee, Mr. Davis, was recognized.
I think the chairman, thank you for having this meeting. I think perhaps the biggest existential threat to Western civilization is a wrongly structured system of money. Sound money serves as a store of value, a stable store of value, and an efficient means of exchange. One of the key characteristics of sound money is that it facilitates permissionless peer-to-peer transactions, like cash. Currently, of the 100+ countries developing a central bank digital currency, none of them are developing a permissionless system. Every one of them is developing a permission system, including the United States Federal Reserve. So when we talk about permissions, we can get something from that from the Federal Reserve's own report of that. They said in their report that it should be privacy protected, intermediated, widely transferable, and identity verified. Mr. Michelle, Dr. Skinner, Professor Skinner, in your view, is it possible to be both privacy protected and identity verified?
No, in my view, it's not. Once the information is in the system, it's in a system, and somebody's going to get it, and it's going to get out. And I just quickly, really want to say, I'm very happy to hear everybody here about
AML signers and all that represents a violation of the Fourth Amendment and should not be a feature of future payment systems. How many believe, the first witness indicated? Everyone else believes that for future payment systems, there should be some form of KYC, AML, and so on. Traceability of transactions. Okay, that's an interesting sort of branch point of this discussion. Because then the question is how do you implement the best policy, the best privacy? Mr. You referred to a privacy preserving design for this. Is there a specific implementation of that's ever been carried out or even designed? I presume this involves some sort of official government action to de-anonymize transactions or something like this. How does this, can you say more about how that might work?
Yes, thank you, Representative.